IPO research doesn't have to be complex. The real edge isn't speed or hype, it's basic, disciplined research. Start with the prospectus. Focus on the use of proceeds. Is the money for growth or debt? And look at the risk factors to see what could truly impact the business. Next, judge the promoter. You're backing the people who built the company. Ensure they have significant skin in the game and a clean governance record. Check the track record. Look for consistent revenue growth and stable margins over at least 3 years. Narratives are great, but execution is what creates long-term value. Finally, check the valuation. Compare the IPO price with similar listed businesses to ensure you're not overpaying for the excitement of a new listing. Treat every IPO like a real business purchase. Master these basics, and you'll avoid the common traps of the IPO frenzy. Start your research today. Welcome to part 1 of our IPO research series. Today, we're focusing on the single most important document, the prospectus. The first thing to check is the use of proceeds. Is the money funding growth, or is it simply going toward debt repayment? If the funds are for expansion, it shows a commitment to the future. If it's just to pay back early lenders, be cautious. Next, look at the revenue drivers. You need to understand exactly how the company makes money. Is it volume, pricing, or regulation? Understanding the business model helps separate value from hype. It's the foundation of any smart IPO decision. That's the prospectus. In part 2, we'll judge the people behind the business, the promoters. I'll see you there. Welcome to part 2. In an IPO, you're backing the people who built the company. Promoter quality is a key predictor of long-term success. First, check the skin in the game. A meaningful continuing stake after the IPO suggests the promoters are aligned with your interests. A steep reduction in holding can be a red flag. If owners are exiting rapidly, ask why they no longer want a major stake. Watch for governance red flags like frequent related party transactions or complex structures. These often hide significant risks. Investigate the promoter's integrity. A strong business can still fail if the owners don't treat you as a long-term partner. Promoter research is essential. In part 3, we'll shift from people to performance as we analyze the financial track record. I'll see you then. Welcome to part 3. While marketing leans on stories, investors must focus on hard numbers. Execution is where long-term value is built. Start with the basics. Has revenue grown consistently over the last 3 to 5 years? You want stability, not just a pre-IPO spike. Next, examine the margins. Stable or improving margins show a business model that can actually withstand competition. Check the return on capital. Has it stayed above the cost of capital? This tells you if the company is generating real value. The best businesses perform across entire market cycles, not just when times are good. Always look for resilience. Financial analysis helps you separate substance from hype. In part 4, we'll answer the final question: is the price right? See you there. Welcome to part 4. Even a great company can be a bad investment if you pay too much. Today, we answer the ultimate question: is the price right? Start by comparing the IPO price with similar businesses already listed on the market. Does the pricing offer you a genuine margin of safety? Always normalize the earnings. Don't let the excitement of a new listing cloud your mathematical judgment of the company's true value. Look at forward-looking multiples. How does the price-to-earnings ratio stack up against the industry average and the company's growth potential? Valuation is the bridge between a compelling story and a successful investment. It requires a disciplined, numbers-first approach. Mastering valuation helps you stay objective during market frenzy. In our final lesson, part 5, we'll put everything together for your IPO strategy. I'll see you there. Welcome to the final part of our series. We've covered the basics. Now, it's time to put it all together into a winning IPO strategy. Your strategy must be built on discipline. Never chase hype. Instead, use a strict checklist for every issue you consider. Think like a long-term partner, not a trader. Real gains come from businesses that grow sustainably for years after listing. Manage your risk. Diversify your applications and never commit too much of your portfolio to a single new listing. Master the fundamentals, stay disciplined, and treat every IPO as a serious purchase of an existing business. Thank you for joining this guide. You're now equipped to improve your IPO returns with clarity and confidence. Good luck.